Hi, welcome to Market in a Minute. This is a big week for the markets. The Fed needs to perform. Maybe the market sells off on what they do on Wednesday. We'll see. They need to set the stage properly of what the path looks like going forward. Went to New York last week, went to a healthcare conference, plus did some due diligence on a number of business development companies like Ares Capital. And we got a lot of ideas from the trip. I'll give you the highlights of everything. And I tell you, Charlie Kirk's family, I feel so sorry for them. That's got to be the most despicable thing I've ever seen in my life. I think it will cause a big movement globally from this. And we have some ideas about that as well. So the Federal Reserve meeting on Wednesday, we think they're going to cut by 25 basis points, a quarter of a point, to bring the high end of the range of the federal funds rate down to 4.25. There's an outside chance they'll cut by half a point, outside chance, but we think maybe a governor or two might vote for that 50 basis point cut. What the market wants to see is 3 cuts by year end, and then a good dot plot forecast. So meaning, all the voting members, they put out their forecast for the next year or two, and the market wants to see that rate down at 3 to 3.25 by year end 2026. So basically, a point and a half to point and a quarter is what the market's looking for. Also, this is a big problem for me. I would love to see the quantitative tightening stop. The Federal Reserve, it continues to dump $35 billion of mortgages into the market. It's dysfunctional for the mortgage market. They need to stop that and let the mortgage market start to function. As they bring rates down, that the yield spread will tighten, and you'll see a lot more activity in the housing market and give a nice boost to the economy and employment. So Powell did a beautiful job at Jackson Hole. He really did. So the market wants to see kind of a similar performance, meaning 3 rate cuts by year end and be somewhat dovish about things. Now the 2-year Treasury correlates really highly with the federal funds rate. So the 2-year Treasury is really what drives the federal funds rate. It was at 4.25 start of 2025. It's now 3.5. Federal funds rate, high end of the federal funds rate is at 4.5. So you see what the market's saying. The market's saying that the federal funds rate needs to come down significantly. So the market wants to see that. So the market outlook. So the market on forward 12-month earnings is currently valued at 23.2 times for the S&P 500. That is high. That's a earnings yield. Okay, so that's the 1 divided by the PE ratio of the market. That gives you the earnings yield. That equals 4.3%. So you compare that with other interest rates, like the federal funds rate at 4.5. You can see that it's distorted. The Fed's way behind where the market says it should be. So either the Fed's way too tight, or the valuations of the market is way too high. So the Fed needs to cut rates to support this valuation. So there's some speculation in the overall market. We're seeing that in Oracle and some of the cryptocurrencies. Tulip mania is back in some areas of the market. So the market keeps plodding along. It keeps the same old stocks going, it seems like. It needs to broaden out. Really, that's what needs to happen. We need a broadening in the overall market. So catch this for Oracle. So Oracle is up 42% from where it closed to the high of the market the next day. 42% on that quarter on their quarterly earnings from a large order from OpenAI. OpenAI may become a great company, but the order is for $300 billion of services. I don't see any way that OpenAI can pay for those services at this point. They need to raise a lot of capital. They certainly are not going to fund that with cash flow by any means. I think I hear things like, okay, they have about 40 billion of assets on their balance sheet. I don't know if that's the correct number or not, but so there's so many if, ands, or buts in that quarter that was just reported from Oracle. The stock's got to pull back, maybe pull back significantly as the market, gets wise to really what's going on. Ethereum, okay, there is a bubble happening in Ethereum. Check this out. It went from 1,500 back in April. It's 4,500 now. I wish I invested in these cryptocurrencies. I just can't bring myself to do it. I just don't get it. But anyhow, Ethereum up in a big way. So what's happening is Wall Street is funding these shell companies, these just nothing companies. They're putting hundreds of billions of dollars into them, and you know what they're doing with it? They're buying Ethereum. So as these companies go up, they're basically paying a big premium to buy it versus their market cap. So as this occurs, it creates more and more money to go out and do this. So more companies are doing it. It's creating a circular of money spilling into Ethereum. Granted, there's some benefits to Ethereum, but the move in it is rather obscene at this point. So in certain parts of the market, there's clear bubble occurring in the overall market. However, if you peel the onion back a little bit, the overall market itself doesn't look bad. So here is the momentum stocks. This is the USA momentum. So you can see that it's up about 23% year to date. And that's a fairly large move versus the overall market. The S&P 500 up about 12. Okay, it's somewhat distorted with all this going on. So there's some distortion in the S&P 500 as almost half of the S&P 500 is in technology, and there's a lot of movement in those mega cap technology stocks driving this. So we think that that's kind of playing out at this point. We loved Google for a long time. That stock finally has had a big move. We think Google is really, really the stock to play of that group. And OpenAI, I don't think they're going to compare to Google really. So just keep that in mind when you're thinking about Oracle, all right? Okay, so the market's up 12%. The equal weight S&P 500 is up only 7.6%. So that is a true measure of the overall market, 7.6. So you can see that there's these bubbles, these distortions happen in the overall market. You got to be aware of it. If more money starts to go into those type of stocks, it's going to create a big problem for the overall market. So when the Fed cuts rates, we want to see that broadening out occur. So other areas of the market really start to pick up to carry that cyclical momentum into next year. Looking at the S&P 500, okay, this is a very steep channel here. So the high of that channel, you can see we hit it a couple times, but the high of that channel currently is 6650 on the S&P. So that's up less than 1%. You hit that high again, and what's happened a few times as it hits that high, it pulls back. So last few times it's happened, it's pulled back below the 20-day and it's rallied again. So the old saying, don't fight the Fed, I believe in that, but there's distortions in the overall markets. The markets need to broaden out. So don't fight the Fed. What has to happen is that it needs to rotate into other areas of the market, and that's what we're hoping to see. So, the market is at a high level, and if the Fed doesn't do what the market wants, it's going to correct. It's going to break that back down below that 20-day. So we're looking for a pullback in the overall markets, and that may or may not occur, but we're looking for a pullback and then a higher high into 2026. I think the odds of a pullback are pretty highly likely. The timing of that, you never can tell. It might be tomorrow, or it might be 2 or 3 months from now. But that pullback will occur, and I think pretty highly as well that we'll see new highs in 2026. So some ideas, okay? So we attended the Wainwright Healthcare Conference. These guys really put on a good conference, I gotta say. A lot of companies go there that we want to see in biotech. And Anavex, as you know, is a company that we like a lot. Um, they are halfway, roughly, through the information request from the European Commission to get their Alzheimer's drug approved. So sometime in the first quarter, we think that approval is either going to happen or not. And, I guess we should caution a little bit. Don't be overly surprised if it doesn't get approved on the first go around and it gets approved maybe a month or 2 or 3 months later. But we think highly likely that this drug will get approved. And then what could be a real catalyst in the near term is an FDA filing for their drug to get approved in the United States. If that occurs, we think that stock could go up 50 to 100% on just that news announcement. Vivek Ramaswamy. Okay, he took my idea partially. Okay, I think all these small companies trading below cash, they ought to be rolled into one of some sort, and you fund the best, the best drugs out of it. You consolidate everything, put into one massive company, you'd have a really interesting company. What Vic wants to do is liquidate these companies, keep the cash, and put the money in cryptocurrency. Well, the cryptocurrency idea is playing out. It's too late to do that, but he's raised a rather large fund, I hear, close to $1 billion in assets. So there is probably some overall support to these small companies out there. Avidel, okay, AVDL. So I met with this company. I've only spoken to them over the phone, so we had a good meeting. I kind of liked the management team actually. There's a lady that basically runs the operation. Very impressed with her. But what they're doing is they have a case against Jazz. And Jazz is one prevented their product to come to the market, which actually destroys their product. Okay, so this is for narcolepsy. So Jazz basically had a scam against them, saying that they had patents that prevent them from launching their drug. It was a total scam. They're going to court in November. They're seeking $1 billion. So Avidel's probably somewhere like $1.5 billion market cap or less. So what they're going to do is distribute to shareholders the proceeds of that lawsuit they have with Jazz. So that could be a nice big windfall for investors. I'm not sure I'd buy the stock here. Maybe I'd wait for a little bit of a pullback, but I think if they win that suit, that's going to be a really nice return for everybody. MediWound, MDWD. So when you have time, go on to their website, check it out, MediWound. Check out what they do. Look at the pictures. It's incredible. So if you're a burn victim, man, this thing heals it so quickly without all the pain you go through on burns. So they've finally expanded their capacity by 4x. It's coming online next year, and we think this is the catalyst for the stock. They're up for a big Department of War award for their to stockpile their product. Could be $100 million in value. They're only doing 25 million currently, so this could be a big award. So just think in terms of their revenues going up by 4x over the coming couple years because this capacity coming on stream. So the stock should follow suit to some degree. Gene editing, met with CRISPR and Beam. I think these companies are coming back. Boy, these companies have really come down in a big way in price. I think they're developing things that will get into the markets, and the stocks have just been really obliterated. So we think that there's nice upside in these. We're kind of picking our spots, but these are interesting companies. Capricor, CAPR. Okay, so this is for Duchenne muscular dystrophy. There's no cure for this. This is a really interesting drug for these young boys. And it's going up for a PDUFA date in November. We think it's a really interesting spec. So the FDA has not treated these guys right. It's tormented their stock. We think that finally this thing's going to get approved and it could move in a big way. Again, high risk, but we think there's big upside to it. Went around to see the business development companies, and they're all located around New York. So saw about 5 of them. Went to their headquarters, sat with management, and here's the problem. Like Ares Capital is an example, right? And then one is probably good to use as an example, FSK. FSK has a big dividend yield. It's roughly 70 cents per quarter. That dividend yield, for maybe other reasons than just interest rates coming down, it's going to probably get cut to about 50 cents. But we think, as an example, if you're a BDC and you're currently making 10.4%, the yield on your portfolio, right? We think that with interest rate cuts, maybe it comes down to 9.4 or maybe 9. So the dividend's going to follow that yield on their portfolio. So they're all going to get cut. The way to play these is through the baby bonds or through their bonds, much less risky, and you still get a really good return. And as the interest rates come down, as long as they don't call those bonds, they're going to have a nice appreciation potential as well. So Sting was at the conference. He entertained. Really big fan. He was fantastic. He had some really good stories to tell around his songs, why he wrote them. It was really, really entertaining. Okay, Charlie Kirk. Again, what happened was a tragic shame. And for people to be jubilant about this is utterly despicable. I'm so sad for his family. We're guessing what will happen from this is that his legacy is going to spread. The MAGA movement, for lack of a better way to describe what's going on, is going to spread. His impact on young Christian conservatives was very positive. So the hate and violence, it needs to end. I think that there's going to be some measures to go after the hate and violence in our country, and companies to get on board with this. So the mega brand looks like it brought out about 3 million people in London. That's amazing. So we think one of our themes, to boil this down, this is an investment video. To boil this down to, okay, what do you do with this besides feel really bad for Charlie Kirk and his family, is that we think reshoring is going to be a major theme. As globalism is dying, nationalism is shifting into gear. So there's probably a way to play this in small caps. I think small caps will do well over the coming years as with reshoring and with interest rates coming down as a theme. And I guess, we were nicely surprised with American Eagle. That was a great move in that stock, up more than 100% in it at this point. The ad campaign was brilliant, but it just shows you how upset the far left, I'm not saying the left, there's a lot of good people on the left, but the far left gets so upset about these type of things, and that the mainstream saw this and really got behind American Eagle and bought a lot of their product. Rest in peace, Charlie. Take care.